Good morning, everyone. Today, we're going to explore the complete journey of one of the most influential and powerful companies in the enterprise technology sector, Oracle. Our presentation, The History of Oracle, will track its remarkable evolution, from its beginnings as a niche database project for a single government client to the global tech giant it is today. We will cover its foundational history, its key acquisitions, its core business model, its vast ecosystem, its financial performance, and the significant challenges it faces in this new era of hyperscale cloud and artificial intelligence. Oracle's story begins in 1977. Larry Ellison, Bob Miner, and Ed Oates founded a company called Software Development Laboratories, or SDL. Their first major contract was a pivotal one, building a relational database management system, or RDBMS, for the CIA, which was codenamed Oracle. Just 2 years later, in 1979, the company, now renamed Relational Software Inc., or RSI, shipped Oracle V2. This was the first ever commercial SQL RDBMS. In a famous marketing move, they skipped V1 to imply that the product was already stable and in its second generation. This set the stage for rapid expansion. In 1986, now as Oracle Systems Corporation, the company went public with an IPO that raised $31.5 million, fueling its growth. A critical turning point came in 2005. After a long and hostile takeover battle, Oracle acquired PeopleSoft for $10.3 billion. This move signaled the beginning of a massive acquisition strategy designed to dominate the entire enterprise software market. That acquisition strategy defined the next decade. In 2010, Oracle completed the $7.4 billion acquisition of Sun Microsystems. This was a monumental deal that gave Oracle control of 3 critical assets: the Java programming language, the Solaris operating system, and the widely used MySQL database. In 2016, as the cloud market was heating up, Oracle made a hard pivot by acquiring NetSuite for $9.3 billion. This instantly made Oracle a major player in cloud-based enterprise resource planning, or ERP software, particularly for the mid-market. Then, in 2022, Oracle made its largest acquisition ever, buying the electronic health record company, Cerner, for $28.3 billion. This signaled a massive strategic push to become a dominant force in the healthcare industry. This brings us to today, where Oracle's focus is squarely on competing in the cloud infrastructure market with its Oracle Cloud Infrastructure, or OCI, and positioning itself as a key provider for high-performance computing and enterprise AI workloads. But no tech giant operates in a vacuum. A core part of Oracle's strength and market reach comes from its key partner ecosystem. This is a collaborative network that is essential for driving enterprise transformation and, more recently, AI innovation. This ecosystem is built on 3 main pillars. First, strategic cloud and tech partners. These are foundational partners like Microsoft, whose strategic alliance enables Oracle Database at Azure, as well as NVIDIA, which powers OCI with advanced GPUs, and Intel and AMD, which provide the core processors for its infrastructure. Second, the global system integrators. These are the consulting giants like Accenture, Deloitte, PwC, and Infosys. They are the ones who advise, implement, and manage Oracle solutions for clients worldwide, and they are investing billions to train their staff on Oracle's platforms. Third, the ISVs and OPN program. This is the Oracle Partner Network, which enables independent software vendors and other partners to build on, sell, or service Oracle Cloud technologies, fostering a broad community of specialized solutions.
Next, let's look at the core assets that drive Oracle's position as a global tech leader. What are its key resources? Oracle's resources can be split into 2 categories. The first is its technology, IP, and global infrastructure. The technology portfolio is immense. It's built on its world-leading Oracle database, the ubiquitous Java platform, its comprehensive Fusion applications for SaaS, and its high-performance Oracle Cloud Infrastructure, or OCI. This is all bolstered by its acquired portfolio, including assets like NetSuite, PeopleSoft, and Cerner. This IP is supported by a massive global infrastructure, which includes a vast and expanding network of OCI data centers, a purpose-built Gen 2 cloud architecture focused on performance and security, and a worldwide network of R&D facilities and customer support offices.
The second category of resources is its human capital and brand. Oracle employs top-tier, world-class engineers, a deeply experienced enterprise sales force, specialized cloud architects who migrate complex workloads, and a vast support team of tens of thousands. This is matched by its powerful brand. Oracle has global recognition and a massive customer base, including most of the Fortune 500. This creates a very sticky ecosystem. The high switching costs for core database and ERP customers make it difficult for them to leave, a fact that is reinforced by the extensive partner network we just discussed.
So with those resources, what are Oracle's key business activities? In short, it aims to power the entire enterprise with a complete, integrated stock of cloud, applications, and database solutions.
This breaks down into four main areas. The first two are its foundation. Cloud Infrastructure IaaS/PaaS involves building and running a comprehensive suite of cloud services on OCI, including compute, storage, networking, and new generative AI services. And second, its legacy and its future, database and data management. This is Oracle's home turf. It leads the world in database technology, from its traditional on-premises databases to the fully autonomous cloud database, as well as MySQL and its Exadata hardware.
The other two key activities are the application layers that run on top of that foundation. Cloud applications, or SaaS, involves delivering a complete integrated suite of Fusion applications to run entire business operations. This includes ERP for financials, HCM for human resources, CX for sales, and SCM for supply chain. It also includes NetSuite for growing businesses. Finally, vertical industries and services. Oracle doesn't just sell generic tools, it provides specialized, pre-built solutions for specific industries like Oracle Health from the Cerner acquisition, financial services, retail, and utilities.
This integrated, full-stack model allows Oracle to offer several core value propositions for its customers' success. Let's look at the four main ones. First, integrated cloud infrastructure. Oracle's key pitch for OCI is that it is engineered for superior performance at a lower, more predictable cost, especially for demanding enterprise workloads. This chart illustrates how OCI aims to deliver better compute and database performance for a lower monthly cost compared to its competitors. Second, complete connected SaaS applications. The Fusion Application Suite is designed as a single unified platform. This breaks down the data silos that traditionally exist between departments, allowing a company to run its entire business, from finance and HR to customer experience and supply chain, on one platform.
The third, and perhaps most unique value proposition, is the world's only autonomous database. This database uses AI to be self-driving, self-securing, and self-repairing. It automates all routine database management, patching, and tuning. As this chart clearly demonstrates, the goal is to dramatically reduce the manual labor hours required for database operations. Time spent on management, patching, and tuning plummets, freeing up a company's valuable IT resources to focus on innovation instead of mundane maintenance.
And fourth, deep industry-specific solutions. As we've mentioned, Oracle offers pre-built applications with embedded industry best practices and compliance features. This is critical for complex, regulated sectors like financial services, healthcare, retail, communications, and the public sector, which cannot rely on generic tools.
Now, let's do a quick deep dive into one of those key application areas:
the Oracle Customer Experience, or CX Cloud. This suite is designed to connect every single customer interaction across the entire business.
Oracle's CX Cloud is not just one product, it's a unified suite of applications. This approach breaks down traditional data silos, ensuring that every team, from marketing to sales to service, has a single, complete view of the customer. As this visualization shows, the suite is built on 4 core pillars: marketing, sales, service, and commerce, which together cover the entire customer journey.
Each of these pillars is a powerful application on its own. Marketing focuses on identifying the best prospects using AI analytics. Sales streamlines the lead-to-cash process with a 360-degree customer view. Service is about delivering consistent omni-channel support and empowering agents with a unified desktop. And commerce manages both B2B and B2C transactions, personalization, and subscriptions, all from one platform.
The real power of Oracle CX comes from its intelligent foundation. It's not just a collection of apps. As this chart shows, 4 key technologies form its base: a unified data platform to eliminate silos, embedded artificial intelligence for predictive insights, powerful data analytics for behavior trending, and a connected cloud to link the CX suite with the rest of your business. This foundation allows Oracle CX to manage the entire customer lifecycle as one continuous, connected process powered by shared data. It starts with attract through targeted marketing, moves to engage prospects with sales and marketing tools, converts them using sales and commerce, retains them with proactive service, and ultimately turns them into loyal advocates for the brand. But Oracle's key argument is that a customer's experience doesn't end with sales or service. It's connected to your supply chain, your finances, and your people. Oracle CX is the only suite that natively connects to your entire back office, your ERP, supply chain, HR systems, all on a single cloud platform. In summary, Oracle's CRM approach is about creating a single, connected platform that uses data and AI to deliver personalized and seamless experiences at every stage of the customer journey. Now that we understand what Oracle sells, let's take a look at who they sell to. This section visualizes Oracle's diverse B2B customer segments. Oracle's segmentation is multi-layered. The first and most important layer is by industry or verticals. Oracle provides highly specialized, industry-specific applications tailored to the unique regulatory and operational needs of different sectors. This chart shows the breadth of that focus, from financial services and healthcare to manufacturing and hospitality. Next, we see segmentation by company size and solution need. While historically dominant in large enterprises, Oracle's acquisition of NetSuite significantly expanded its reach into the small and mid-sized business (SMB) market. Customers are also segmented by the fundamental problem they need to solve, which generally falls into 3 main categories: their core database and data management needs, their infrastructure needs, IaaS and PaaS, and their applications needs, SaaS. Diving even deeper, the SaaS segment is broken down by core business functions: finance, ERP, human resources, HCM, customer experience, CX, and supply chain, SCM. Finally, Oracle markets to specific key user personas within these companies. This diagram shows the hierarchy of influence from the C-suite, CEO, CFO, CIO, who focus on strategic transformation, down to IT and business unit leaders, and further down to tactical and operational users like database admins, DBAs, and developers.
To reach all these diverse segments and personas, Oracle uses a multifaceted approach. This slide outlines its corporate channels, how it connects, sells, and supports its customers.
There are 6 primary channels, and the first 3 are focused on sales and access. The direct sales force is a global team of experts, including enterprise account managers and specialized solution engineers, who work directly with large customers. This is complemented by the partner ecosystem,
which extends Oracle's reach through solution providers, resellers, systems integrators who consult on large projects, and ISVs who build on Oracle's platform. And third, digital and online, which provides direct, self-service access to information, demos, and cloud infrastructure management via Oracle.com and the OCI console. The other three channels are focused on support and brand building. Customer support ensures customer success and issue resolution through portals like My Oracle Support, MOS, and proactive customer success managers. Community and education fosters a network of skilled users and developers through active forums and official training from Oracle University. Finally, events and marketing builds the brand and generates leads through broad-scale advertising, global industry shows, and its flagship customer conference, Oracle Cloud World.
Now, let's shift our focus to the financial side of the business. This section provides an infographic overview of Oracle's cost structure based on recent fiscal year data. At a high level, every dollar of Oracle's revenue is allocated between direct costs, operational expenses, and profit. As you can see, it's split fairly evenly. Roughly 30% is cost of revenue, the direct cost to deliver products and services. 35% is operating expenses, or OPEX, or the cost to run the business, innovate, and grow. The remaining 35% represents the implied pre-tax profit.
Let's do a deep dive into that 30% cost of revenue. The vast majority of this, 21% of total revenue, is spent on cloud services and license support. These are the direct expenses for running its vast data centers, power, hardware, bandwidth, and paying its customer support personnel. Another 7% goes to salaries for consultants and technical experts in its services division, and a small 2% goes to hardware costs for producing engineered systems like Exadata.
Now let's look at the 35% in operating expenses. This is how Oracle invests in its growth. 17% of total revenue goes to research and development, R&D. This is crucial funding for engineering new products, improving OCI, and building AI capabilities. 15% goes to sales and marketing, S&M, which includes Salesforce salaries and commissions, global advertising, and marketing events. Finally, Oracle runs very lean administrative costs, with only 3% of revenue going to general and administrative or G&A functions like finance, legal, and HR.
This bar chart provides a consolidated view comparing all individual cost categories as a percentage of total company revenue. As you can see, the single largest expense is cloud services and license support at 21%. This is followed closely by R&D, 17%, and sales and marketing, 15%. This clearly highlights the company's priorities: running its cloud, building new tech, and selling it.
There are three key takeaways from this cost analysis. First, Oracle's cost structure is cloud-centric, heavily weighted towards the massive expense of running and scaling its OCI infrastructure and providing support. Second, it shows a huge investment in growth, with the company spending significantly and almost equally on R&D, building new tech, and selling and marketing, selling that tech. And third, Oracle maintains lean operations. Its very low administrative overhead relative to its size demonstrates strong operational efficiency.
Now, let's look at the other side of the ledger, Oracle's revenue streams. This data is based on the fiscal year ending in May 2024. For the 2024 fiscal year, Oracle's total revenue was $53.0 billion. The breakdown is fascinating and tells the story of a company in transition. The largest single portion, 46%, is license support. This is the recurring revenue from maintenance and technical support for its on-premise software. This is a stable, high-margin cash cow. The second largest and the primary growth engine is cloud services, SaaS plus IaaS, at 37%. This includes all subscription fees for its cloud applications and infrastructure. The remaining segments are much smaller: new cloud and on-premise license sales at 6%, hardware at 6%, and services at 5%. This revenue data gives us three key insights. First, cloud is the future.
Cloud services is the main growth driver, showing strong double-digit growth as Oracle transitions its customers. Second, legacy is the foundation. That massive 46% from license support is the stable, profitable cash flow that funds the company's R&D and cloud expansion. This creates a tale of two halves. Oracle's revenue is dominated by two major categories, the high-growth cloud business at 37% and the highly profitable legacy support business at 46%. This combination of legacy and cloud puts Oracle in a unique and challenging position. It is fighting a multi-front war, competing across the entire enterprise tech stack, from foundational cloud infrastructure to critical business applications.
Oracle's competition is fierce and can be broken into three main arenas. In the cloud arena, its OCI platform competes directly with the big three hyperscalers, AWS, the dominant market leader, Microsoft Azure, which is leveraging its vast enterprise customer base, and Google's GCP, which is strong in AI and analytics. In the data battleground, its core database business faces threats from Microsoft SQL Server, modern cloud data warehouses like Snowflake, and popular NoSQL databases like MongoDB. And in the application suite, its Fusion and NetSuite apps compete head-to-head with SAP and ERP, the undisputed CRM leader Salesforce, and the cloud-native HCM leader Workday.
This competitive landscape creates two key strategic battlegrounds for Oracle. The first is cloud market share. Oracle's primary challenge is carving out significant market share from the big three hyperscalers. Its core strategy relies on offering better price performance and migrating its huge existing database customer base to OCI. The second battle is all-in-one versus best-of-breed. Oracle pushes its integrated Fusion suite as a single vendor solution. However, customers must constantly choose between this all-in-one approach or using specialized best-of-breed tools for each job, like Salesforce for CRM and Workday for HCM.
Now let's look at the very latest financial performance from the highlights of Q4 and fiscal year 2025. The results show the strategy is gaining traction. Q4 total revenue was up 11% to $15.9 billion. This was driven by Q4 cloud revenue, which grew an impressive 27% to $6.7 billion. Total remaining performance obligations, or RPO, a key metric showing contracted future revenue, was up 41% to a massive $138 billion, signaling strong future demand.
These strategic highlights from the recent fiscal year tell a clear story. Strong future demand is confirmed by that RPO, future booked revenue, jumping 41% to $138 billion. Infrastructure domination is evident as cloud infrastructure IaaS revenue led the growth, rocketing 52% to $3.0 billion, driven heavily by demand for AI. And for fiscal year 2025 success as a whole, total revenue grew 8% to $57.4 billion, with operating cash flow up 12% to $20.8 billion.
However, despite this strong performance, Oracle faces significant headwinds. Let's conclude our presentation by examining the key challenges Oracle must navigate in this new era of hyperscale cloud and generative AI.
First, the hyperscale cloud battle. Oracle was a late entrant to the IaaS PaaS market. It faces intense, entrenched competition from the big three, Amazon, Microsoft, and Google, who dominate in market share, developer mindshare, and existing cloud adoption, making it a steep uphill climb. Second, the legacy to cloud transition. Oracle's traditional business was built on high-margin, on-premise software. Shifting this massive customer base to a subscription-based, pay-as-you-go cloud model is a long, complex, and expensive transition that constantly risks cannibalizing its own profitable legacy revenue. Third, integrating a sprawling portfolio. As we saw, Oracle's growth was fueled by decades of major acquisitions like PeopleSoft, Siebel, NetSuite, and Cerner. A significant ongoing challenge is to seamlessly integrate all these disparate technologies, code bases, and corporate cultures into a single, cohesive One Oracle Cloud experience.
Fourth,
The AI and developer mindshare race. While Oracle is investing heavily in AI infrastructure, partnering with NVIDIA, and embedding AI into its apps, it's competing against rivals who are perceived as the generative AI leaders. Moreover, it must fight to win over the next generation of developers who often default to open-source databases like PostgreSQL or the cloud-native tools from AWS and Google. Finally, evolving brand perception. To many in the tech world, Oracle is still the database company, or an old guard provider of on-premise software. A core marketing and strategic challenge is to shift this perception and successfully rebrand itself as a nimble, innovative, and cost-effective cloud-first company that can compete at the highest levels.
In conclusion, Oracle stands at a major inflection point. It has successfully built one of the most profitable legacy businesses in tech history, and it is now using the cash flow from that foundation to fund a massive, aggressive, and high-growth pivot to the cloud, AI, and healthcare. Its core strategy is built on an integrated all-in-one stack, arguing that it is the only company that can provide everything from foundational infrastructure and databases to a complete suite of industry-specific applications. However, it faces deeply entrenched competition on all fronts, and the core challenge of transitioning its own identity and its customers from a legacy leader to a cloud-first innovator. The strong growth in OCI and its massive $138 billion in remaining performance obligations show that the strategy is working. But the battle for the future of the enterprise cloud is far from over. Thank you.